Hi everyone, Gary Coleshill here, and yes, you are in the right place. Today we'll be going to be talking about college funding with Scott Rulon from Rulon Financial, who happens to know about this stuff. So grab a pen, grab some paper, and be prepared to make some notes because this could help you save a lot of money on college. Not a bad thing, right? Anyway, without much further ado, I want to introduce you to Scott. So, Scott, welcome, and the floor is yours. Take it away.
Thank you so much, Gary. I'm so happy to be with you here on this Tuesday afternoon. I know that your time is valuable and you want to get the most, as they say, bang for the buck, especially when it comes to college. So this is one of those places where you're saying, Scott, show me the money. Where can I find it for my son or daughter? So I would just like to start out by if each one of you could type into the chat whether you are a parent or a student, that would be really helpful for us to learn where you're coming from. So a lot of times I will speak from the parent's point of view, but certainly I'm guessing there are some students here on the call that would like to learn a lot more about how to manage their college tuition bill. Today, college tuition is just massively expensive. In fact, a couple days ago, was helping a new college planning client with a daughter who had done very well on her ACT and has great grades in school. And one of the places she's applying to is the University of Chicago. For those of you that don't know, University of Chicago is what we call a profile school. So profile schools have to fill out a very special application. But what I really wanted to let you know is cost of the University of Chicago with room and board and tuition. How much do you think it is, Gary? Are you muted?
Yeah, I muted myself there.
Okay,
Probably quite a lot. For a year or for you mean the
for a
whole thing?
year.
For a year? I don't know, 50 grand maybe?
Would you believe it that it's closer to 80?
Wow, that's a lot of money. Yeah.
Yeah, so when we look at different schools, you know, the Harvards, the Yales, Colgates, Emory's, even one popular football school called Notre Dame, those are approaching the $80,000 mark today. So that's a scary thing for most parents. So there's lots of options when it comes to college, but the number one option that you all need to do is go to the website that I have up on the screen. It is called studentaid.gov. And on studentaid.gov, this is where you actually fill out the FAFSA form. It is called the Free Application for Federal Student Aid. So I will tell you that no aid is possible without filling out this form. And I would say the number one mistake made when going to college is not filling out this form. So there are several parents over time that we've asked, have you filled out your FAFSA form? And they have no idea what this is. FAFSA form is a way for the federal government to assess based on a certain set of questions. And I think today it's about 129 questions what your financial ability is to go to school and how much aid you might get. And so this is the website that you go to do that. And so let me tell you about the most important, I'm going to call it formula when planning on going to college that you should figure out. And this is part of what FAFSA figures out. First thing, grab your pen or pencil. It's called cost of attendance. So that means going to college all in what it's going to cost. And so we're not just talking about tuition, we're not just talking about where you're going to live, but I think you need to also put in factors like getting to college. What about transportation? What if you're not living in a dorm? Will you need a car? Will you need access to a bus system? If you're going to come home for holidays, will you have to take a plane flight? So these are all extra kind of soft costs that most of us don't think about when we're going to college. So the second item that's important is called the expected family contribution. Today, I believe they call it something a little different called SAI, but it's still kind of the same. It's the same deal. So the expected family contribution is how much you are required to contribute toward your college education. And so let me kind of give you some of those factors that FAFSA considers. So one of the big things that they look at is they look at how much money the parents make. And when they look at how much money the parents make, they multiply that times about 20%. And that's one factor on the EFC. The next thing that they look at is how much does the student make? There are certain types of work aid at colleges, and if you actually work for the colleges, that can be exempt from the contribution. But if you're working outside of college for like, let's say you're working for a local restaurant or McDonald's or retail store, the colleges will extract 21% of the money that the student earns at that place and place that towards that EFC calculation. The other thing is, let's think about assets. So what is an asset? Well, asset is obviously something that you own. It's worth a certain amount of money. And so regarding those assets, if the asset is in the student's name, colleges expect pretty close to 21% of that asset is going to be accessible for paying college tuition. However, if the parents own that asset, only 6% of that is important in the college planning application. So I think you've learned an important rule here, very important when going to college, that most of the assets are listed in the parent's name. Even when I do simple math, assessing 6% versus like 21, 22%, there is a very big difference there. So we want to do that. So other things we can look at, let's not forget some sets of parents own rental real estate. That is countable as an asset unless you do a certain thing, and that's part of the secret sauce that we teach here. So I'm not going to tell you what that is today, but if you want to find out, you could certainly schedule an appointment at some time in the future if you have real estate assets. So that's really important. One of the other things that you should never put into the asset formula is your 401k, 403b, 457 IRA. So anything that is a retirement asset or some sort of deferred comp should never be put in the asset field on the FAFSA application. If you do that and you have a fairly sizable IRA, well, even one as small as, let's say, $100,000, that can cost you, if you put that in and you weren't supposed to, that can cost you $6,000 on your expected family contribution. So we want to be very careful with that. Another type of asset we want to be very careful with is business assets. So let's say that mom and dad own a company that's worth a certain amount of money. Okay, there are certain rules within the FAFSA application talking about what type of business assets are included and what types are not. And so I will tell you, if your business has more than 100 employees, it's includable. If it has less than 100 employees, 9 times out of 10, it's not includable. So you don't want to put that asset in the FAFSA form. So the other thing, that there are a couple things you can do, put money in certain type of assets that are also exempt from the college funding formula. One of those assets are annuities. Annuities are typically not included in the asset formula because they are a tax deferred type asset. The other type of asset, and I bet you won't have even thought of this or think of it as an asset, is cash value life insurance. Now, I know most of you think isn't life insurance for when you die, so somebody else gets the money? Well, that's only a piece of life insurance. Most people don't understand that when we're talking about life insurance, not term, but a cash value type or an IUL, individual universal life. If those build out a cash value, one of the things you can do is you can actually borrow against that cash value to help pay for college. So typically for those that want to do that, I would certainly recommend you start doing that when you're younger, and you can build up quite a value in there. And the beautiful thing here is if you borrow that money, you don't necessarily have to pay it back, but you can. But any of that money that you borrow comes out in a beautiful way. That beautiful way is tax free. That's what I said, tax free. What other families will do when it comes to college funding, they will go out and buy an annuity. Now, annuity is very simply just a savings account at a life insurance company. And when you take money out of that annuity, it doesn't fall afoul of a college funding formula. Now, I should let you know that when you do take money out of an annuity, it is federal income taxable and state income taxable, but it's not assessed on the FAFSA application. So that's an important thing that most of us should know. A lot of you are probably here to learn about scholarships. The reality is scholarships probably only represent about maybe, and this is outside scholarships, maybe about 3% of the college funding formula. Truly, most of the money that you'll get for colleges these days will come from the colleges and universities themselves. Although I do know some ambitious students who do take the time to fill out lots of scholarship applications. And when I say lots, I would say 50 to 100 applications. And so you'll notice suddenly when your son or daughter, or rather your student, gets to about their junior year in high school, you'll start getting all of these, let's just call them, for lack of a better term, advertisements about college. So a sponsor will go out of their way to sound official. So scammers sometimes use official sounding words like national, educational, federal, or they put an official looking seal to fool you into thinking they are legitimate. So check with your school if you question a provider's legitimacy. I have seen a whole bunch of scam sites out there saying for $39.95, we can guarantee your student will have no problems with college. You need to be really careful with that. So I'm going to give you now some of the 10 scam warning signs. Number one sign, fees. You shouldn't have to pay a fee to search or apply for scholarships. Check out a free scholarship search at a place called fastweb.com. Now you should all be writing this down. Fastweb.com, FASTWEB.com. Now it will take your student, and I recommend your student do it because you want them to have some buy-in to the process. Fill out that form. It'll take about 30 to 45 minutes. And on a regular basis, probably weekly, based on the preferences you put into that particular application, FastWeb will begin to send you some possible scholarships for those people. The second scam warning sign is credit card or bank account information. If a scholarship place is asking for your credit card or bank account information, let me just be honest with you, run. Run as fast as you can, because you should never have to give credit card or bank information to award providers. Number three, scholarship guarantee. Well, if scholarships are competitive, there's no scholarship organization that can guarantee you a scholarship. I think what you'll find out is for the bigger scholarships, there's one called the National Space Foundation scholarships. They award that to 10 kids in the whole US, and they actually give them a $10,000 scholarship. So that is a great scholarship. Actually, one of my clients actually won that scholarship. So I know that it's winnable. What they got to do is go to Cape Canaveral and with their parents, and those 10 kids got the money. No work involved. This one, if you hear no work's involved, you can't avoid putting in time to fill out a scholarship application. It's just really plain and simple. No contact information. Well, every scholarship provider should give you names, phone numbers, email addresses, websites where you can contact them, not a PO box, but an actual mailing address. Unsolicited scholarships. What would you do if someone just called you on the phone? Hey, we've got this huge scholarship for you. It'll only cost you X number of dollars. Well, that's kind of like those old Nigerian letters who we've all heard of some rich person died in Nigeria or Liberia, and if you will help that move that money to the United States, we'll give you so much of that. All you have to do is send us X number of dollars. Well, that's a scam from the very beginning. If they use pressure tactics, don't allow yourself to be pressured into applying for scholarship, especially if the sponsor's asking for money up front. That just doesn't work. There is no money up front. If you pay money up front, I can almost guarantee you it's a bad place. So claims of exclusive scholarships. There's really no such thing as an exclusive scholarship. Now, if you have certain parameters and you're willing to write an essay and you kind of get the idea, there's no freebies when it comes to this. We already talked about number 9, going out of the way to sound official. And here's the big one. Have you ever noticed that if one of these places calls you and they don't answer your questions directly? If somebody is answering a question with a question, they are probably not a legitimate site. So be very careful with that. I thought what we'd also do is just take a look here at this actual student aid site, and we'd go through the top line here. There's information about how to fill out the FAFSA form. how to renew your form, reviewing and correcting. Well, let's say you do make a mistake on the form. Can you correct it? Absolutely. So I actually had a family, and they didn't come talk to me first. They literally put their $400,000 401k on the FAFSA form. It just ruined their child's opportunity to get any type of financial aid at that school. One of the things that I did is, after reviewing that form, I changed that and we resent it to the university. But just place in mind that if you do something like that, you do have to defend your actions on that. Because most of the colleges will question, well, why are they changing it? Did they lie to us up front? So be really careful with that. Other ways of getting into college are undergraduate and graduate loans. So a good example of an undergraduate loan is a Stafford loan. There are two kinds, one subsidized and one unsubsidized. Now, the beauty of the Stafford loan is, mom and dad, you do not have to co-sign on that to pay it back. Most times these Stafford loans have a fixed rate of interest. So unsubsidized means interest starts calculating from the time you borrow it, but you don't have to start paying back the loan until 6 months after you graduate. The other type, which is subsidized, unless you have extreme financial need, you probably won't get much of that. But you don't have to pay interest when you first borrow it, but you do have to start paying it back 6 months after your student graduates from college. So first year, freshman year, you can borrow $5,500. Next year, you can borrow $6,500, and for the junior and senior year, generally, you can borrow $7,500. Now, I really haven't seen those loan amounts increase lately, but certainly college tuition is going up by 12% a year at some places even more. I think it can almost be argued that as loose as credit gets on the college loans, the colleges and universities think they can raise their price even more. Another type of college loan is called a Parent Plus loan. So a Parent Plus loan usually have variable interest rates. Remember, with a variable interest rate, the banks usually win, because as interest rates go up, so does your loan go up. The bad thing about Parent Plus loans, number one, mom and dad, you have to co-sign on these. So if the student doesn't pay for it, guess what? You're on the hook. And by the way, with Parent Plus loan, you have to start paying that back as soon as you borrow the money. Literally, you're going to have to start making payments each month. One of the worst situations I've seen a lot of parents get into is they have multiple kids in college. And I've seen some parents having to pay $3,000 or $4,000 or $5,000 a month for these loans. So be really careful when it comes to loans. If you're going to do that Stafford loan, you're going to have to take some loan education, and you're going to have to sign what is called a master promissory note. What that means is, in most cases, you can never get out of paying a student loan unless you have some special program, like you're a doctor and you go to work in a disadvantaged area, or you're a teacher and you decide to teach in an inner city school. Sometimes you can do that. So those are the different types of loans. So the other thing is this thing called a Pell Grant. Pell Grants are a great thing. So if you are what we call I'm not going to call you a disadvantaged family, but maybe you have not made the kind of money that many others do. And if you make less than $60,000, you can be eligible for, I think it's up to $7,395 and Pell Grant. Um, Beautiful thing about a Pell Grant is it is a grant. A grant doesn't have to be paid back. Um, so if you're a family that makes less than $60,000 a year, have a great opportunity here for the Pell Grant. And so what they do, they don't pay the money directly to the student. What they do is each semester they pay the money directly to the college. So there's no opportunity to use that for other purposes like taking a vacation or buying a car. So today we went over a couple different opportunities. Every time we talk about college funding, I like to change it up a little bit and talk about different things. So today, Gary, why don't we see if there's any questions? And so, because it's always hard to ask the first question, Gary, guess who gets to ask it?
Thank you. You're going to put me on the spot. I did have a question. When you were talking about assets earlier, and you said that rental properties will be used as assets, right? What about but your primary home? Does that not count?
No, your primary home does not count. It can count to a certain extent on a different form called a CSS profile, and that's for kind of the elite 200 universities in the US. And there is something in there. So what most people will do when it comes to college funding, when rates were lower, they might have gone out and gotten a HELOC to help pay for college funding.
Right.
But they do ask you how much you bought your house for and how much it might be worth. It does not become part of the college asset calculation.
Okay. If you can just explain a HELOC as well. A HELOC is a home equity line of credit, correct? Which is a basically a second mortgage, isn't it? Really, but it's a bit more flexible.
Yeah,
Isn't that kind
so
of it?
it's one that you can write. You don't have to borrow it all at once. They approve you for a certain amount, and you can take pieces of that over time. And so when rates were lower, and I think what are mortgage rates today, Gary? What have you seen?
Around 6% at the moment. I think about 6.5.
Okay,
They do fluctuate, but they were up as high as about 8.
yeah.
Right,
So I
only a
mean that.
couple of months ago. So
Yeah, so what most people do if they're going to use a HELOC for college funding, often what they'll do is borrow as much as they can right before the student enters university. And then they'll use some of that. They'll use some of that money
right,
there. So that's one way of doing it. Some people will take out what's just called a second mortgage. So second mortgage is just a separate it's just a separate loan. So a HELOC is often called an open-end fund because you can borrow as you need up to a certain amount. But when you're taking a second mortgage, you're taking out a lump sum. And of course, those do have to start being paid back immediately. Um, so in the old days, we used to recommend HELOCs because they were tax deductible. That's not really the case anymore because if you don't use the HELOC money on improving your home, you can't deduct the interest anymore. So that's an interesting wrinkle in that. Then we talked about Stafford loans. There's another type of similar type loan called a Perkins loan. It's just another type of federal loan. It's very similar to the Stafford, generally given for lower income people. Pell Grant, very important. So if your family comes from maybe a lower income area, um, you can apply for Pell Grant and get some free money. I would definitely recommend, Gary, people getting today on this FAST website and start filling out the information on there. Very important. There are some actually scholarships for universities that are contingent on your student writing an essay. Here in Arizona, there's one at the University of Arizona in the College of Engineering that they won't even consider people who haven't written an essay. So that scholarship for engineering is called the Brown Scholarship. So many of your universities have that. The other place to go at certain universities for scholarships is a place called the Bursar's Office. Bursar is generally a disbursement agent for those people that have left some sort of money to a university. And under certain circumstances, if you qualify, the bursar will give that money to your student. So let's say they've not given out all the money for the exact specifications, but they have to give out something. I would definitely consider going to the bursar's office and asking if they have any extra money. Many scholarships you'll find are one-time scholarships, especially ones by like the Elks Club or Rotary or some of the student aid. Those are different types. So there's a question here. Does the death of a parent or guardian who is totally responsible for the payment of a loan payment for a student affect the loan payment in any way?
It's a good
Um,
question. Yeah, I don't know. I'm sure you do.
well, well, what I can tell you is there are different versions of paying back a loan. There are some versions that are based on income, and I would guess that if there's been a dramatic decrease in the income in the family, um, I would guess there's probably something out there for that. It's going to change your FAFSA form in the future, obviously. But there are certain times that you can get deferments. And one of those deferments may very well be because a parent has passed away. And so if the income earning parent has passed away, kind of difficult to pay the loan. So
Surely, yeah.
I'm not sure of the exact form for that, but the place to ask for that would be your college financial aid office at your local university.
Yeah, that was a good question. Thank you very much for asking that. That was Samuel. Um, yeah, that was a good one. And also a question here as well. Can I correct a mistake after filing and submitting the form? I think we actually covered that, but if
Yeah,
you
we
want
did do
to,
that. So absolutely you can do that. Now, I would correct it as soon as possible. And just so you know, the college or university is going to notice that you changed your FAFSA form. And so they're going to ask you, they will probably ask you to provide proof of why you changed it.
yeah, they're going to question it, no doubt.
Yeah, absolutely. But if you did it for a legitimate reason, maybe you put your 401k or individual retirement account in the investment field by accident, yeah, you need to explain that to them. There's often different types of aid dependent on a family situation. So if we have divorced parents, who do you think, whose college or income information do you think we put on this in a divorced parent scenario?
Um, well, the main breadwinner and probably the person who has custody of the children, I would think.
Okay, so the person that has custody of the children may not be the main breadwinner.
Okay,
So it
that's
really comes
true.
down to the person with custody of the children.
Really? Okay,
So yeah, and so we do have, so you need to be very careful when you fill out the FAFSA form that you don't put the other parent, the non-custodial parent's information on there,
okay,
or that can
makes
cost you
sense.
money.
So,
So
custodial parent.
custodial parent,
There you go.
absolutely.
Okay, all right. Well, do we have any other questions? Anything else anybody would like to ask? Because we were over the 30-minute mark now, which we did promise you was our about where we're going to be at. So, anybody else have any questions? Is there anything in the? Let me just check in the Q&A. No, we're good in the chat. Anybody want to add anything? Would anybody like to speak? We can unmute you. if you like to speak, or you can just type a quick question in the chat box. We'll give you about another 30 seconds for that, and then we're going to wrap. And when we do end the webinar, our survey form will pop up in your browser. So make sure you fill that out. It's pretty straightforward, isn't it? There's probably 10 questions. The most important ones are obviously for verification are your name and address, email, and phone number. But we have a couple of other questions on there that we thought might be relevant. And yeah, if you'd like to fill those out too, we'd appreciate it. And Tanika's asked a question here: do federal Pell Grants only deal with students whose parent work in the military? That's a good question, Tanika. And again, I'll defer to Scott on that one.
No, it's not just for parents in the military. That's a very good question. So it's any parent that if your family household makes less than, I believe it's still $60,000, um, you can be eligible for a Pell Grant. So I have noticed that they have certainly raised the amount of money they give in a Pell Grant today from 6,000 to over 7,000. So that's a great deal, but it's not just being in the military. One of the interesting things, if you have a parent in the military and they choose not to use their educational benefits while they're in the military, they can give them to you to use those. But I think the big sticking point here is the parent still has to be in the military. If they've left the military, the GI Bill benefits don't count anymore.
Yeah, just reading actually on, because that's on the screen. Obviously, if you meet the requirements above but aren't eligible to receive a federal Pell Grant due to your EFC being too high, you might be able to get an Iraq or Afghanistan service grant as well. So that's interesting.
Yeah, so there's lots of different availabilities.
Yeah.
So, how about children who lost their parents? Can they apply? Absolutely. There's nothing that prevents. Here's the interesting thing. By filling out the FAFSA application, in case you didn't know, you will automatically apply for the Pell Grant. So that is part of the process.
Oh,
So
okay.
when they look at their calculation, they will decide if you are Pell Grant eligible or not. So that's why it's really important to fill out the FAFSA application, because you can get no money, whether it's merit-based, need-based aid at all, if you don't fill out the FAFSA application. Very, very important.
Okay, excellent. Thank you. Thank you, Scott. Some very good questions too. Thank you, guys. It was good to have a nice interactive session for a change. You were a particularly good group in that you asked questions, etc., and got involved. Do appreciate that. Makes it easier for us. Otherwise, we're just giving a speech, right, Scott?
No, absolutely. And so every time we do this, Gary, so we certainly always talk about loans, but every time we teach this, I like to mix it up a little bit and talk about a little different wrinkle on here. And so I think you will have noticed that. But thank you all so much for attending. If you have any questions, you can certainly contact us by telephone. If you don't feel good about contacting by telephone, just send us an email.
Yep, and our contact details are in the chat. So
Absolutely.
feel free to contact us afterwards with any questions. And also, if you like this today, we'll be more than happy to send you a copy of the recording, providing it comes out, of course. And also, if you go to our YouTube channel, which we can shoot you over the email for that, we have many different recordings on college loans. And as Scott says, he does change them up. So they're all pretty different. They've all got different things that he covers in them. So you may well want to subscribe to our YouTube channel. And if you send me an email, I'll send you over the link. So that's pretty much it. Expect to see that survey form popping up right as we end up here. So we're going to stop recording now.